This is example of exercise number 25. Sri Narayan. Narayan, a retailer who keeps his books under single entry system, gives the following information for the year 1995. Information for the year 1995 is given for you people, and cash book is the first statement. Okay, you check the cash book whether it is a cash book or it is a statement. Okay, you see the balance at bank. Balance at bank is here, opening balance, and balance at bank closing day is there. So I think it is a bank account because balance at bank, opening and closing are given in the form of bank. Therefore, it is a bank account. Okay, and you see something about the cash transactions or cash balance. I think there is no cash balance in the statement. So I consider that all the transactions are undertaken with the help of bank only. There is no cash transaction. Okay. And this is the cash book. This is the cash book. There is no need of preparation of cash book once again. And next is account balances. 1195, 31st 1295. Opening balances and closing balances are given. Opening balances goes to opening statement of affairs. Closing balances goes to closing statement of affairs. Okay. Sorry, closing balance sheet, not the statement of affairs, closing balance sheet. And you see here in the asset and liability 1195, 31st 1295. Stock, debtors, furniture, bills, and building. These balances are given. They are not given all the balances because cash balance, bank balance is not given in this balance. So you have to take the balance of bank from the above statement, from the cash book. Remember this. While preparing statement of affairs, you have to take the opening cash from the cash book and bank balance at the end in the balance sheet, you have to take from the cash book. This is the point you remember. Otherwise, if you forget to take this, then your system will damage. Okay, this is the first part, cash book. Second part, account balances. Then other information. In the other information, provide for doubtful debts is there, depreciation is there, outstanding expense, insurance unexpired is there. Then goods worth rupees 500 were used by proprietor. These are the some adjustments. Okay. There are three parts. In the first part, cash book. Second part, opening and closing balance of the accounts. Third part, adjustment. Okay. We will see the first part regarding cash book. So you have to prepare first opening statement of affairs. Opening statement of affairs is not given. Therefore, first requirement is opening statement of affairs. And second requirement is accounts related with debtors and creditors. Accounts related with debtors and creditors. Debtors related accounts are debtors account, bills receivable, creditor related account, creditors account, bills payable account. Okay, these accounts you have to prepare and ascertain the missing information. After ascertaining the missing information, you prepare the final accounts. Okay. First come to the statement office. Cash book. In the cash book, opening balance at bank. This is the opening balance. You have to take in the opening statement of office. Then sundry debtors goes to debtors account, credit side by cash. Bills receivable goes to bills receivable account, credit side by bank. You write as by bank. Then rent is here. This is a income goes to P&L account, credit side. Income. It is a income goes to P&L account, credit side. Cash sale goes to trading account, credit side. Then sundry creditor. Sundry creditor goes to creditors account, debit side to cash. Bills payable payment is there. This goes to bills payable account, debit side to cash. Wages goes to trading account, debit side. Salary goes to P&L account, debit side. Rent and taxes goes to P&L account, debit side. Purchase of ornament for his wife. Purchase of ornament for his wife. It is not a business purchase or business related item. It is not a business related item. Okay. Then what it is? What it mean? Purchase of ornament for his wife. It is a personal expense of the owner, proprietor. Therefore, it is called as drawing. This is drawing. This is the drawing. You have to call this as a drawing. Goes to balance sheet. Then advertisement goes to P&L account, debit side. Another drawing is here. This also goes to P&L account, sorry, balance sheet. Okay. Total, there are two drawings. One is purchase of ornament. Second is drawing. These two add and take in the balance sheet asset side under the head capital. You deduct it. Okay. Then closing bank balance goes to balance sheet. Then stock. Opening stock goes to trading account and opening statement of his. Closing balance goes to trading account and next balance sheet, asset side. Debtors goes to opening statement of here, then opening balance to the debtors account. Closing goes to closing balance sheet and debtors account closing. In the same way, creditors. Opening creditors, opening balance, closing creditors, closing balance. Then you have to take in the balance sheet and statement of affairs. Bills receivable, opening, closing in the bills receivable account, and opening goes to opening statement of affairs, closing goes to balance sheet. In the same way, bills payable, opening statement of affairs, opening balance in the account, closing bills payable, closing account, closing balance, and goes to balance sheet. Then furniture, opening goes to opening statement of where, closing goes to closing statement of closing balance sheet. Then building opening goes to opening statement of where, then closing goes to balance sheet. Okay. Next come to the adjustment. Provision for doubtful debt. Provision for doubtful debt goes to P&L account. This is the P&L account item. Then deduct in the debtors balance sheet. Depreciate furniture, P&L account, balance sheet. Outstanding salary, add in the salary P&L account and take to the balance sheet as outstanding salary. Then unexpired insurance. Unexpired insurance means it is the insurance paid, but its period is not completed. Its period is not completed. That is nothing but it is prepaid. Unexpired insurance means insurance premium is paid well in advance and period not completed. Therefore, it is called as prepaid insurance. Prepaid insurance is to be deducted in the P&L account and considered as asset and goes to asset side. Remember this point. What to do? Deduct in the P&L account in the respective head. Then take this item in the asset side of the balance sheet. Okay. Then goods worth rupees 500 were used by the proprietor for the personal use. Goods used is the drawing. This is the drawing First, you have to take this in the trading account. This comes in the trading account by drawing. Remember this. Goods withdrawn. First, you record in the trading account credit side by drawing. Then deduct in the balance sheet capital. Then you have to add this amount in the total drawing. So there are 3 drawings. In the cash book, there are 2. One is ornament, second is drawing, and third is drawing in the form of goods. There are 3 drawings. You take the total of the 3, then deduct in the capital. Okay. And this is to be recorded in the trading account first. Remember this. Then prepare the trading profit and loss account. Clear? Now we prepare the necessary accounts to ascertain the missing information. Okay. 1195 opening statement of affairs. First, I will prepare the opening statement of affairs. Exercise number 20. Exercise number 25. Okay. This is the opening statement of affairs. Then first is the debtors. Sorry, first is the stock in the opening balances. Asset and liability balance, stock is there. You write the stock. Stock rupees 18,700. Then sundry debtors. Sundry debtors 12,000. Then sundry creditor. Sundry creditor liability side 9,000. Bills receivable. Bills receivable asset 4,000. Bills payable liability side 1,000. Furniture asset side 600. Building 12,000. These are the opening balances given under the head asset and liabilities. Okay, this is not completed. One more opening balance is there that is not given in the asset and liability balance. You see the cash book. In the cash book, 2 balance at bank is there. That balance you have to take. Otherwise, your statement of affairs is not completed. With these amounts, if you complete or close the statement of affairs with these items, your statement of affairs is wrong statement of affairs and it is incomplete. Remember this. So you record bank balance. Bank is rupees 8,350. This balance you have to take. Okay. So remember, my dear friends, whenever you prepare the statement of affairs, you have to search all the opening balances. All the opening balance. Okay. Simply collect from one side. You don't collect from the one side. You go through the problem and collect all the opening balances to prepare the opening statement of affairs. Okay. Now the opening statement of affairs is completed. Information regarding this is over. Now I'll go to next slide, that is debtors and creditors. Debtors account, total debtors account, total creditors account I'll prepare. Okay. First I'll take the debtors account balance. 2 balance brought down 12,000. I collecting from the balances. 2 balance brought down 12,000 and bills receivable balance is 4,000. Then buy balance carried down, debtors 14,000 is there. And bills receivable buy balance carried down is 5,000. Okay, these balance I collected from the account balances. Then from the cash book debit side, debtors is there, bills receivable is there. So buy cash 38,400. You write this as a bank because there is a bank account. So you write it is a bank account. Then in the bills receivable account, you write by bank 12,000. Okay. These two items taken from the bank. Okay. Account balance is in account cash book completed, account balance completed. You go to third part. Third part is adjustment. In the adjustment, depreciation. Sorry. In the adjustment, depreciation is there. Then outstanding salary is there. Prepaid insurance is there. Goods worth rupees 500 is there. So there is no item related with the debtors account. Okay, these are the items related with the debtors account. Now I'll go to creditors related accounts. Creditors related account. Okay, total creditors account, bills payable account. Here also you take the opening balance and closing balances from the balance. You take the balance from the balances. First, creditors account by balance brought down. Creditors account by balance brought down. Creditors is amount is 9,000. Then bills payable by balance brought down. 1,000 is there, opening balance. Then you write the closing balance. Two balance carried down, bills receivable amount is 1,500. Okay. Then bills payable closing balance. By balance carried down 200. Balance recorded. Then go to cash book. In the cash book, payment side. Payment side, there are two items. One is creditor, another is bills payable. So you take on the debit side of these accounts. To cash amount is 27 to 100. Okay, to cash creditors. And in the cash book, bills payable is 9,300. Okay, these two items from the cash book. Cash book part completed. Then adjustment, there is no adjustment regarding the creditors. Okay, this part is also completed. So the statement of is completed. Debtors related completed. Creditors are related completed. Now I close the account. First you close this bills payable account. Bills payable account total is 9,500. Okay, 9,500 is the total. Difference is 8,500. Okay, 8,500 rupees here. This is the important item, creditors. Write as creditor. Okay, this is bills payable accepted. Bills payable accepted. Then you take the same in the creditor account. Same in the creditor account. By bills payable. Now you close the bills creditor account. Creditor account total is 37,100. 37,100. Difference is 28,100. This 28,100 is the credit purchase. Credit purchase. Okay. Credit purchase we ascertained. Then go to the above account, that is debtors and creditors account, debtors and bills receivable. Debtors and bills receivable. You close the bills receivable account. Bills receivable account is total 17,000 credit side. 17,000 credit side. Difference is 13,000. Okay. Difference 13,000. This goes to debtors account. Two debtors account. You write two debtors. In the debtors, you write by bills receivable. By bills receivable. Okay. By bills receivable. Now you close the bills debtors account. Debtors account total is 65,400 credit side. You take to the debit side 65,400. Then ascertain the difference. Difference is 53,400. 53,400. Then this is called as credit sale. This is credit sale. Okay. This is the credit sale. Debtors account completed. Creditors account completed. Now go to statement of affairs. Statement of affairs. Okay. You close the asset side. Asset side total is 55,650. 55,650. Then difference. Difference is 45,650. This is called as capital. This is capital. Clear? Okay. You have to close the accounts after entering all the transactions. Okay. How I am closing? In the same way you have to close. Otherwise, some missing information will be available at the end. Okay. If the missing information you collect at the end of the account, then you have to rectify the opening statement of affairs and whatever account you closed before the last accounts. Okay. Account portion completed. Here we assert in the credit purchase and credit sale. Credit purchase, credit sale, then opening capital. 3 missing informations ascertained. Now we go to preparation of P&L account. Trading profit and loss account. The first item in the trading profit and loss account is to opening stock. Opening stock is 18,700. Next item is purchases. You see the purchase, whether there is only one purchase or credit cash purchase is there. In the cash book, there is no purchase. In the cash book, purchase is there, but that is ornament, not the goods. Okay. Therefore, only credit purchase is there in the creditor account. You take credit purchase from the creditor account, 28,100. Okay. Then go to cash book. In the cash book payment side, wages is there. 2 wages, amount is 12,250 wages. Salary, rent, advertisement, these items related with the P&L account. So come to the credit side, buy sales. In the sales, cash and credit are there. You take credit sale from the debtors account, cash sale from the cash book. Credit sale 53,400 in the debtors account. And cash sale 8,600 is there in the cash book debit side. Cash book debit side. You take the total and deduct the return. If there is a return, there is no return. Therefore, you take this amount to the outer column. I think it is 62,000. 62,000. Next item is you have to take the drawing. By drawing. Drawing means goods withdrawn by the owner for personal purpose. Okay. Credit side, you have to show all the goods dispersed from the business. Goods dispersed from the business is to be shown on the credit side. Goods received from goods received to the business is to be shown on the debit side. Okay. Goods goes out from the business by way of sale, by way of own consumption, by way of theft, by way of fire, like that. By way of free sample, I already explained in the previous class. Okay, you take the drawing made in the form of goods. That is 500. 500 you remember. This is the new item. Therefore, I taken this problem. By drawing. By closing stock, you take closing stock is, I think, this 23,400. Okay, these are the items related with trading account. You close the trading account, total is 85,900. 85,900. Now gross profit is 26,850. You check it is the correct or wrong. Something went wrong. 0, 8 plus 2, 10. 10 plus 9. Right, it is 85 to 900 total. And gross profit is right. Okay. To take the gross profit to the next part, 26,850. 26,850 is the gross profit. Now you take the P&L account items. In the P&L account, first item is salary. To salary you take in the inner column. Add outstanding salary. Outstanding salary is 1,200 in the adjustment. Add outstanding 1,200, total 7,700. 7,700 salary. The next item in the P&L account is rent and insurance. To rent and insurance, you take inner column. You take in the inner column. Then for that, there is a unclaimed insurance. Unclaimed insurance means not expired. Unexpired. Is it unclaimed or unexpired? Unexpired. Unexpired means its period is not completed. Therefore, it is called as prepaid. Prepaid is to be deducted. You have to deduct the prepaid. So less prepaid 200. 200 rupees there. You deduct 200 rupees. Balance is 5,000. Okay. Rent and taxes. After the rent and taxes, the next item is advertisement. To write advertisement, advertisement is 330. Okay, advertisement. The item from the cash flow completed, come to the adjustment. In the adjustment, depreciation is this. RDD is there, first item. RDD is rupees 1,450. Reserved for doubtful debt 1,450. Then next is depreciation on furniture 5%. You calculate 5%, it is 30 rupees. On 600, 5%, 30 rupees. Then third adjustment, outstanding salary already made. Fourth adjustment, prepaid insurance, it is already recorded. Then fifth adjustment, goods withdrawn, drawing already recorded. So the problem complete and I close the P&L account. Sorry, one more is there, rent. I forget to take it. In the cash book, receipt side, rent. While explaining this point, I explained and forget to take here. Once again, I am telling, so you have to check before closing the account, you have to check other income side expenses. Rent is there, you take rent 1,500. It is income. If it is receipt side, if it is in the receipt side is a income, if it is on the payment side, it is a expense. Remember this point. Now you take the total. Total is 28,350. 28,350 and difference is net profit. Net profit is 13,840. 13,840 is the net profit. Clear? Now I prepare the balance sheet. Balance sheet. What is the name? See, I'll change it. I'll change it. Mr. Narayan. Mr. Narayan for the year ending 31st 12/1995. Okay. This is the balance sheet. In the balance sheet, first you take the capital. In the capital, first opening capital is 45,650. Then add net profit. Net profit is 13,840. Then there is no additional capital in the cash flow. No additional capital and no other matter related with the interest on capital. No interest on capital, no additional capital. You take the total. The total of this is 59,490. Okay. Then you deduct the drawing. Less drawing. There are 3 drawings. You remember, my dear friends, 3 drawings. One is ornament. Ornament is purchase for wife is 1,000. 1,000 rupee ornament. Second, there is a pure drawing 6,520. 6,520. And third is goods 500. You take the total of these 3 and deduct here. Deduct here. The total of these 3 is 8,020. 8,020. 6,520 plus 1,720 plus 500 is 8,020. You deduct. Then balance is called as closing capital. Closing capital. Clear? Capital adjustment is completed. Now you take the creditor balance from the creditor account. Creditor closing balance. Creditor closing balance is 1,500. Bills payable is 200. Bills payable rupees 200. Bills payable account closing balance, creditor account closing balance you take. Then you take the outstanding salary, whatever given in the adjustment. Outstanding salary given in the adjustment or from the P&L account. Outstanding salary 1,200. These are the liability items. Come to the asset side. First you take bank balance. Bank account balance from the bank account closing balance 650. Then next you take the debtors. Inner column 14,000. Debtors account closing balance 14,000. Less RDD 1,450. Balance is 12,550. Okay, debtors. Then you take the bills receivable account balance 5,000. Okay. Bank closing balance, bank account closing balance, debtors account closing balance, bills receivable account closing balance. Okay. Now you take the remaining asset. Closing stock 23,400. Then furniture you take in the inner column 600 less depreciation. Depreciation is 30 rupee. You deduct 30 rupee, 570 is the balance. Then next day you take building. Building is 12,000. There is no adjustment. Okay. After this, you have to write the prepaid expenses. Prepaid expense, that is insurance is there. So don't forget it. Prepaid insurance rupees 200. Okay. In this way, you have to search the items and record. Or now you take the total. Total is 54,370. 54,370 is the total. Okay. Every day I'll upload the video by evening, and you go through the Google, sorry, not Google Drive. You go through the YouTube link. you daily search the YouTube link. Okay, it is enough for today. And daily 9:10. Every day 9:10 morning, I'll take your class and you try to attend the class. Thank you.